Hey traders, Nick Shaheen here recapping week ending 9/7. It was a difficult week for the Bulls for sure, but it was contentious. So let's start with Friday. Friday is ongoing still, and again I'm going to leave you where the fight for the day is still like right here. It could end up or down. So the morning opened on Friday bad with huge set of headlines. And then everything, Tesla, markets, whatever. And then we turned green. It was a really positive day. And then suddenly we got a headline from President Trump, among others, that he is adding another 267 billion. So I'm not very good with math, but I think we've hit the maximum. In fact, he did hit the maximum before. Is this a surprise to us? No, because headlines aside, this was the line we drew for the forecast for the S&P. So it's going along. I drew it a long time ago. Well, in relative terms, a while ago. And, it went up just as we thought, but we thought that they would come back down to retest this zone, which is the neckline from which to break out. So headlines aside, this is not surprising price action. It may go even lower. But the battle for the day, I leave you with the fact that the battle for the day, it could be a lot higher than here or a lot lower than here, depending on what the next headline is. So the week, we've been waiting for two headlines. One was Canada-U.S. negotiations on NAFTA. My feeling is if we haven't heard anything, they're going to kick the can another week. But if they don't, if they say they fell apart, they're not going to talk for a while, it's going to be ugly. Close. The second one was the China tariffs, but the one from this morning, from the surprise, that was a bonus one. The 269 billion was just extra. So doing the math, I think we already have 50 in play. Plus he said he will add another 200 billion, which was what we were expecting or not expecting today on the China tariffs. And then today he adds another 267. So that's 500 and change. I think the total is 520, 540. I don't know. So we're right there. The total. Now, he can tweak the amount. I think it's 12% or 10%. He may jigger it up to 25. At one point, I saw a headline of 25. I don't know what the heck's going on. Neither do we. So we wait for these headlines. And guess what? They're going to spill into next week, perhaps. So headline trading for the short term. For the long term, I remain bullish because the fundamentals still say higher is the likely path because the P&Ls are still great and getting better. And this is likely to continue. But short term, we have to contend with the fact that this is an all-time high number and it scares people 1 foot out the door. And the fact that we do have headlines that we have to contend with. And they're serious headlines. They may change the game. But until we get a headline that changes the game, I stick with my longs. However, I do defend overnight. I am not going long into Monday without protection on specific trades. Like if I'm long Tesla, I'm definitely defending Tesla. You'll see it right up. If I'm long, the Qs, I may take a few puts just to protect my whole portfolio. If I'm long a lot of tech, I'll take Qs. If I'm long a lot of other stuff, I may take the SPY. The DIA, which is the Dow, is in danger again because of the China headline. So the Dow now is back to being, again, this is along the lines of what we expected. So the week, the bears get one. However, double-edged sword to the bears. Everything is going their way. And we are this close to an all-time high. They haven't pounced. So if they don't pounce, these headlines will be stale and the bulls will retake the reins. In fact, I argue that there are no bears yet pressing the short button. These are bulls booking because you can't see Netflix up and Micron up, and these are risky stocks, perceived risky. On a day where, or Baba is up. Baba is a Chinese stock with Jack Ma saying he's leaving the company or he's not going to be involved, and it's up 1.5% or so. So these are not scared markets. These are bulls rotating out of one thing into another and maybe buying some insurance, booking some profit. So the bears need to pounce or the bulls will continue to be in control here. That is my comment. Next week, we have more Fed heads talking. So whatever was going on, here are the Qs. That's the NASDAQ. So we're falling back into consolidation. So whatever was going on is going to likely continue to go on with respect to headlines. But we have a whole bunch of Fed heads talking. And we have, I believe, some inflation reports. And all this plays into the fact that we have in 2 weeks a decision to make on rates. I believe that we are priced in, like the whatever the consensus is, whoever keeps track of that stuff, they say, okay, everybody agrees that they're going to raise one time in September. So, but what they say will be the important thing. But all this comes into play. So on Friday also comes into play. We got a jobs report this morning, right? It was okay, 200K-ish, I think 201, but a couple of problems. One, they revised lower 50,000, the prior one. Like, this is insanity. If you're in the private sector and you revise it 50,000 on a base of 200 or whatever the base was, you get fired. Yet these government jobs, they revise them so big, they're meaningless. But what was meaningful is the fact that wage inflation reared its ugly head. So why do I say that? If you remember, where are we here? Okay, February, right? February 2nd, we had a correction. Do you remember what started the correction? A hot jobs report which insinuated that wage inflation is coming in. Why does that matter for the market? Because then the assumption is that the Fed is going to be aggressive. That's wrong. I doubt the Fed is going to be aggressive because they have worked so hard. They spent trillions of dollars to get us here. They're not going to throw it away. Bernanke and Yellen spent the money. So now, and they also have to contend with the fact that overseas, like in Europe, their rates are 0 or negative on bonds. So they have to stay as close to that as possible. So it will take like massive inflation metrics to go high before they say, okay, we're going to get aggressive and raise every month. That's my opinion. But that's the worry. So back in February, we had that problem. Now, the Fed's not going to react to one report, but if we have another one says wage inflation is getting out of hand, the market will have a little tizzy. Remember, in February, that's what started everything. And then the China tariffs came into play. All right, so I'm going to leave you here. I was going to do the levels, but I just did them with you. The levels at play, I'll put them in writing, I guess. So we broke out to new highs, and we're falling here. But headlines aside, I expect this fall, and I expect this zone to be supportive. And if it's lost, this is the SPY, S&P, then this will be the next line. Why? Because this was a neckline. This was a neckline. Whoever fought over it here, they'll fight over it again. Whoever fought over it here, they'll fight over it again. But we could have a headline that goes, but that can happen at any point in time. Meaning, I trim profits, I book losses early if I don't have that conviction in it. So carrying insurance overnight is a good thing. It makes me sleep at night. I was long Tesla, and this morning would have been an ugly day for me had I not owned protection. And the protection was very profitable. I booked it, but I rolled it. What does that mean? I booked it, and I didn't sit on my laurels. I rebought after the madness subsided. That's just an example. So if I have thousands of dollars in the stock market, why wouldn't I spend a few $100s to make me sleep well for the next couple of weeks? How do I do that? I would just buy SPY puts, or I would defend Apple if I own Apple stock. I would defend Google if I own Google stock. So I will write up a few things, and I'm open to questions. Nick signing out because I don't want to leave this too long of a message.